Camera Cam's Mortgage Minute on Monday, May the 6th. There's an old expression that says that the more things change, the more they stay the same. Well, that could certainly be apropos for the mortgage industry. I mean, there's been a lot of rule changes in the last 4+ years, actually a couple of dozen to speak of. And some of those rules we haven't seen in a decade or so, and some are truly new rules. Basically, things like the mandatory qualification if you're taking a term less than 5 years. For those of you who didn't know it, if you're taking a term less than 5 years or you're taking a variable rate mortgage, you have to qualify in the Canadian benchmark rate. So if you took a 4-year term, and even though the term itself, let's say, had a rate at 2%, bottom line is you have to qualify at 5.14% to debt service it. Or a variable would be the same situation. We've got stiffer documentation requirements than we've ever had. I mean, certainly in a decade plus. Securitization related restrictions are there when the banks are trying to offload some of this paper, some of this mortgage business. They've got different rules they're contending with, which they're obviously filtering down to us. 80% loan to value on refinances. I remember when I started in the industry, you could go to 95%. So it's been a big change in the industry. Basically, refis have been certainly very, as I said, restricted compared to what they used to be at one time. Rental income treatment. The rules have dramatically changed there, where we've gone from a fully offset rule to all files to now basically an add back rule in all CMHC insured files. Again, if you want clarification on that, give me a call. It's a little harder to explain in a quick Cam's Mortgage Minute. But for all intents and purposes, basically, if you look at it, you've lost about half of what you could use for rental income compared to before. So it's made a dramatic shift in qualifying folks. Basically, when you look at it all, I mean, the stricter requirements and all these other rules, coupled with the new debt service ratio rules, which have been tightened up as well, the shorter amortization, like I said, with CMHC insured files to 25 years versus the old 40. There's been a lot of different things that have had an impact on the market, and I'll tell you, a lot of the armchair quarterbacks will tell you that's what's slowing the market down, and that's what's caused the impedance on the market. You know what, my own 2 cents worth, I mean, definitely I'm seeing it. I mean, there's a lot of CMHC insured files, especially with first-time buyers. They've been impacted. A long-term effect of this, well, remains to be seen. There's a lot of people still calling for the government to relax the restrictions, basically make different rules for different buyers. If you're a first-time buyer, maybe you got an extended amortization, maybe you got a different break of some sort. But time will tell where all of this will wind up. So far, again, we're still seeing a steady market. I mean, real estate prices are, holding steady, whatever. There's been a lot of different impact, and again, the next few months will be very revealing. But we've been into these rules now for a few months, and definitely, in some areas, the slowdown's there. Anyway, it's been Cam for Cam's Mortgage Minute. If you're looking for any mortgage advice, you're looking to purchase a home, refinance a home, whatever it may be, give us a shout at the Auxilium team. We're always ready, willing, and able to help, and you can reach us pretty much anytime. Anyway, it's been Cam. Enjoy the sunny day.